This company manages more money than the entire economy of every country except two. You've probably never heard of it. It's called BlackRock, and it's everywhere. In 1988, 8 people started this company with $5 million and 1 computer. Their founder, Larry Fink, had just lost $100 million in his last job. So he built a system to make sure it never happened again. He called it Aladdin. Asset, liability, debt, and derivative investment network. A system built to see risk before it hit. By 1999, that system was so good, other financial firms started paying to use it too. Today, Aladdin doesn't just run BlackRock's money, it runs risk analysis for over 200 rival firms. That means one company's software quietly powers huge parts of the entire financial system at once. No regulator has ever forced a full public review of what happens if that system ever fails. So, how did a $5 million startup become the company quietly running global finances plumbing?
We will secure a significant advantage over our competitors.
The answer isn't one big secret. It's dozens of quiet acquisitions most people never noticed. Fund managers, private equity firms, data companies, quietly absorbed, one deal at a time. Each acquisition added a piece. Together, they built something no single company had ever been before.
We're losing ground on the euro. Sell.
So let's actually look at how big this company really is and where its money goes. BlackRock operates from New York, London, Tokyo, Hong Kong, and dozens of other financial capitals worldwide. It manages stocks, bonds, real estate, infrastructure projects, and increasingly, private companies most people never hear about. Here's the myth, that BlackRock secretly manages money for a handful of billionaires. It doesn't. The real answer is stranger. Most of that money belongs to teachers, firefighters, and everyday retirement savers. Pension funds, government retirement systems, and ordinary investment accounts make up the vast majority of its assets. Sovereign wealth funds and entire governments trust BlackRock to manage portions of their national reserves. And if you've ever bought an index fund through an app, there's a real chance BlackRock built it. That's the real structure. Millions of small investors pooled together into one of the largest pools ever. That scale means BlackRock holds a meaningful stake in nearly every major public company in America, not controlling ownership, but often enough voting power to influence how major companies are run. Every year, BlackRock casts votes at thousands of shareholder meetings on behalf of its investors. Which raises a real question. Should one company have this much quiet influence over the entire market? It's a question lawmakers have actually started asking, in hearings most people never noticed happened. So far, no law has changed, but the scrutiny keeps growing every year, in Washington and beyond. In 2020, during the pandemic crisis, the Federal Reserve itself hired BlackRock to help manage emergency programs. The same company managing your retirement account was suddenly helping run the country's financial rescue plan. Critics called it a conflict of interest. Supporters called it the only firm capable of moving that fast. One billionaire critic put it bluntly, "I didn't know Larry Fink had been made God." Whether you see it as brilliance or risk, one thing is clear, this company doesn't slow down. Its reach now stretches into infrastructure, the physical pipes, ports, and power grids the world depends on. Ports, toll roads, energy pipelines, BlackRock's infrastructure arm now owns pieces of the world's physical backbone. Chances are, some part of the electricity or water reaching your home passes through something BlackRock owns. It also now manages $65 billion in digital currency reserves, moving deeper into crypto every year. Its chairman calls this the next frontier. Every stock, bond, and asset eventually trading digitally, worldwide, nonstop. In his annual letter, he warned that market wealth is now growing 15 times faster than ordinary wages. A widening gap between people who own assets and people who only earn a paycheck. His argument is that more people need to own assets, not fewer, with his company's products naturally as the door in. Skeptics point out the obvious. The company promoting universal investing also profits directly from every dollar invested. That's a fair point. But the data behind the trend is real, whoever benefits from saying it out loud. So let's look honestly at the real concerns and where the actual evidence does and doesn't support them. Some economists argue that BlackRock, Vanguard, and State Street together quietly reduce real competition between companies. Their theory, when the same few owners hold stakes in every competitor, real rivalry quietly weakens. No regulator has proven this in court, but the research keeps piling up and the question keeps returning. Environmental groups accuse the company of contradiction, publicly backing climate goals while still investing billions in fossil fuels. The company's own answer: its job is to follow client demand, not dictate personal values through other people's money. That answer hasn't satisfied critics on either side. Some say it's too green, others say it's not green enough. Several state governments have actually pulled public pension money out, citing political disagreements over its policies. Other states have added money for the exact opposite reason, proof there's no political consensus on this at all. The deeper concern isn't politics at all. It's the Aladdin system itself, running so much of the market at once. If one piece of software quietly touches this much of the system, a single failure could ripple further than anyone expects. That's not a theory. It's an open question regulators still haven't fully answered, even as the system keeps growing. So what should you actually take away from a company this large, this quiet, and this deeply embedded? It isn't a secret cabal, and it isn't purely a villain. It's what happens when scale compounds for decades unchecked. Its size genuinely helps millions of ordinary savers build retirement wealth they couldn't easily manage alone. Its size also means almost no one is fully watching what happens if something inside it ever breaks. Both of those things are true about the same company at the exact same time, and that's worth remembering. The next time you check a retirement account, there's a real chance this company is quietly part of it. That's not a conspiracy. That's just how modern finance actually works now, quietly, at a scale most people never see. And that quiet scale is exactly the kind of story this channel exists to uncover. This is Capital Files, the channel built on real documents, not speculation. Every single week we uncover the real documented stories behind the world's biggest companies. The quiet, boring-looking businesses that almost nobody notices, yet are worth billions of dollars. The bitter rivalries that completely reshaped entire industries and the people caught inside them. And the single, split-second decisions that quietly brought entire billion-dollar empires crashing down. If this story surprised you, the next one about who really owns your money will too. Subscribe to Capital Files and see the real story behind every story. Next week, we go inside the rival fund fighting BlackRock for control of the exact same market. This is the story of how one rivalry decided who actually controls the world's retirement savings. Capital Files, the real stories behind the world's biggest companies. 3 names manage most of your money. You've probably only heard of one. Make of that what you will.